What's going on, fellow investors? Today we're going to be talking about a stock that makes a lot of people rich, and that is a big bank stock in JPMorgan Chase. So Chase is where I leave a lot of my cold hard cash, and the other half I leave under my mattress. Chase usually kicks off the earnings season, and they just reported their Q3 20 results. Banks have been hit really hard here with the C-19 and low interest rates, which isn't good when a big part of your revenue from your business model is dependent on loans. When you're trying to entice people to place money into your vaults, it's even harder to rip them off when interest rates are as low as they are, with the Fed already announcing that they're not going to raise them for a long period of time. Plus, there's also so much more risk with loan deferrals, mortgage defaults, and people just not spending as much money as they have before. But despite all these troubles, guys, JPMorgan does what great companies do, and they find a way to still post an amazing quarter. They actually managed to pull $30 billion in revenue, which is somehow in line with their year-over-year earnings from last year. So they actually crushed their expectations of $29 billion. It also blew earnings per share out of the water at 2.92 earnings per share actual versus 2.23 expected. This seems far off from the world that we currently live in, where consumers and businesses have faced months of lockdown and half capacity measures with no end in sight. Unemployment is also down to 7.9%, but you have to wonder if people are working as much as they did back before the C-19. As always, these videos take a lot of time for me to research and edit. Please touch that blue like button so we can actually maybe for once get on the good side of YouTube's algorithm. As I mentioned before, due to low interest rates, the company hasn't been able to capitalize on all their liquidity from all their deposits. Net interest income, which is the difference of the revenue from banks' interest-bearing assets, such as loans, and the expenses on its interest-bearing liabilities, such as paying interest on savings accounts. Despite the decrease in revenue from their net interest income, their assets under management actually increased 16%. We all know the stock market is somehow reaching new highs after its brief little crash here in the spring. The big positive for JPMorgan is their provisions for credit costs were just $611 million this quarter, compared to $10.4 billion last quarter. And they are maintaining credit reserves of $34 billion due to economic uncertainty, per their CEO, Jamie Dimon. Now, this is money that they were anticipating on not receiving, so to see that drop off significantly is a very good sign. It's the most secure bank in terms of capital, with a liquidity source of $1.3 trillion. Really, it just does show how strong of a balance sheet that JPMorgan really has. Chase is also one of the largest banks by total assets. Prior to the C-19, they had actually outperformed the S&P 500 over the last 10 years. Some of their main competitors are Citigroup, Bank of America, and Wells Fargo. But JPMorgan is no doubt a cyclical stock. Its success largely depends on how the peaks and valleys go in economic activity. Plus, there's so much regulation, as there probably should be with these guys. And the Federal Reserve is already preventing share buybacks and dividend increases. Also, how much of JPMorgan's future and short-term success here is dependent on another stimulus check, which may never possibly come? Will continued high unemployment and a sluggish economy continue? Also, we have the presidential election just around the corner, and could a new administration mean new laws affecting banks? JPMorgan is 10 times as big as the average publicly traded bank. I can't imagine them failing. We already know the government is willing to write a blank check with our taxpayer money for any bailouts. This company has shown that they have a good, sustainable business model. It's shown that it can survive in any era. Many wealthy investors, I'm sure, own the big banks and have a vested interest to see them do well. Plus all the passive shares that are owned by institutions and ETFs that just flow into this company. While other stocks seem to have quickly recovered from their C-19 lows in share price, JPMorgan is one of those that has consistently been moving sideways for the past 7 months. However, its financials seem to indicate to me that they're already ready to turn the corner in the other direction. So there's a bit of a disconnect between earnings and share price, but that could be because of all the unknown factors that I previously mentioned. as investors are pricing in all that future doubt into the current share price. While I wait on my JPMorgan shares to go back up, I do collect a nice yield of about 3.5%. Remember, JPMorgan is barred by the Federal Reserve on increasing that dividend, but I would be concerned if a bank stock was yielding over 5%. I'd rather they invest that back into the business or to have bigger cash buffers. And believe it or not, JPMorgan Chase is still somehow expanding its branches. In 2018, it announced a $20 billion investment that would add 400 new bank branches in just 5 years. They announced during their last earnings call that they've actually opened the 100th bank out of that expansion, with another 75 set to kick off before the year ends. Right now, they're currently trying to penetrate the East Coast states of Massachusetts, Virginia, Pennsylvania, Maryland, and DC area, which is where most of this expansion is happening. So an already big bank is getting even bigger with more potential deposits. I like that a lot. Let me know what you guys think of JPMorgan Chase in the comments below. Maybe I was being too easy on them, or maybe there's even a bigger, better bank. As always, don't forget to hit that like button and subscribe to the channel.